Hello, everybody. It's Joshua Hayes of BigWaveTrading.com for your March 18th stock market wrap-up for you to use on Thursday and Friday for the rest of the week because it's always good looking out intermediate term. Let's go ahead and get a start on the New York Stock Exchange. Now, I want to let you know I took a nap after the closing bell because I didn't get a lot of sleep last night. So I don't know why. Something's bothering me right now, and I'm not sure what it is, but let's hope that it's the opposite. And instead of being bearish, my gut is bearish, but that means that I'm worried over nothing. And instead, our charts are telling us we should be moving higher. How come? Because one problem that I had with the rally so far was I did like the rally on the first day. However, it was up too much. It was up 6%. I wanted it up less than 5%. So I wanted it up 1 to 5% to be normal. 6% seemed to be too much. Oh, well. We followed through, and we did it on higher volume, so I had to go. Still, the volume overall is lower than the volume on the downtrend. But after the 16th, with us now resolving higher on the New York Stock Exchange on the 18th, the volume's starting to look a little bit better. Not great. Still, it is good to see that we're rallying off the lows on heavy volume because that is what I needed for a bear market rally to last longer than any of the previous bear market rallies that we had. Because the bear market rally from January to April, May, whatever, was very extremely weak. And if you call November to January a rally, you're crazy. So there's just been nothing that's worked, and this is probably the best one that we've had, the best one that I've seen in terms of possible longevity along with volume. New York Stock Exchange is hitting resistance right at the 50. However, as strong as it looks recently with the way some charts look like they're rounding out, and I'm starting to get more and more nice charts show up, hopefully it can work out. But one of the stocks I was showing you yesterday doesn't look as nice now as it did. Maybe I shouldn't have mentioned it, but I don't think it's just me. I'm not big enough. There's not enough people watching and listening to me to have an effect on a stock. But I don't know. Maybe it does. I need to be a little bit more careful what I talk about on the free YouTube videos, I guess, and the free website videos. But yeah, it lost its green bobsleigh, and I don't like that when the market was up. But let's go ahead and move on. Let's look at the SP 500, see if it's matching its brother, the New York Stock Exchange. And it obviously is another higher day today, right at resistance at the 50-day moving average. It's going to be really important what happens here. But since we got up to the 50-day moving average on strong volume today, I would assume that we're going to go above the 50-day moving average. And if anything, if volume starts to taper off again, we should probably fail the 200. If not, we're going to blast out and we're going to go higher. And I'm more than willing to go for that, especially considering that we were down intraday today and that we've been able to reverse it. The NASDAQ, as you can see, was good all day long. The low today was almost where it opened. It opened at 1454, went down to 1448, and it did nothing but go higher. It hit above 1,500, but closed only at 1,491. Still very bullish. And the one key thing that I really see here that makes me very happy, look at how large the volume bar is. Also, is this a options expiration day? Absolutely not. Monday, Tuesday, this is only Wednesday, folks. So this is real accumulation, especially since we were up over 2%. This was buying by institutional funds today. So the market now looks good to me. However, at the same time, if the market was really strong about ready to start a bull market, everybody's going to go into the stock market. Why did this happen today in stocks or in commodities like platinum? Platinum went all the way down to 1030 today after opening up pretty high and was looking pretty weak and had a very weak session going on. And then it rallied all the way back up, closed at the high of the day at 1057 for platinum. At that same end, silver completely collapsed intraday, it looked like. Intraday, silver sliced through the 50-day moving average and actually hit 1189 after opening at 1271. But miraculously, it came all the way back to $13 and closed at $12.92, giving us one heck of a hammer pattern at the 50-day moving average. I would buy silver here if I didn't know what else to do with my money. Then let's look at the ever important gold. And once again, gold opened at $915.20 and broke down hard and hit 882 intraday lows. But before it could even get to the 200-day moving average, buyers came in and stepped it up, taking it up, up, up. They just bought and bought and bought and bought. And then next thing you know, there's a 50-point reversal, and the market, after a 50-point reversal, is hitting 954 intraday for the high. Just amazing. Closed at 942.20. Bottom line, though, is that's a heck of a move in gold. That's a heck of a move in silver intraday-wise, and platinum's looking bullish. Oil even today
was down to 46.92, came rearing back to close near the high of the day at 49.87, at 49.57. Extremely bullish move on oil today. Extremely bullish move on gold and silver today. I can't even express how bullish the move in silver and gold was today. It was shocking. Gold looked like it was breaking down, and I was telling everybody intraday in my chat room that, great, now we can start to accumulate gold at lower levels. That's excellent, because I would love to actually buy gold at lower levels. I just started a small position, actually, and I'm really depressed that I didn't start buying it when I told everybody to start buying gold in 2001 after September 11th when it was only around like $300. I feel like an idiot because I was also shorting the dollar and with options buying long-term puts that were expiring because I bought them so far out of the money like an idiot, which I never do, but I was for certain the dollar was going to collapse, but it didn't collapse fast enough like I thought it would, so my options expire worthless. My gold I never even take. Now gold goes from 300 to 1,000 without me. The dollar collapses from over 120 whenever I first made my first put buy, and now where is it at, the dollar? How did it react today? Did it crash? Oh my God, it did. Oh my God. Okay, folks, see, this is me looking at it for the first time. Oh my God. 84.35. Yeah, it's ready, I guess, to break down again. I'd get out of all of my longs. If I bought it from the move over the 50-day moving average right here, I think I would go ahead and just go ahead and get out. That's horrible. That's an ugly, ugly, ugly rollover. You think it's wise to be printing money, folks? You think it's good to just print instead of cutting taxes and stopping the ridiculous, insane, asinine socialists leading to us communist spending? This chart right here is going to be the proof that socialism will not work because that is a nasty breakdown. I had no clue the dollar did that today. Wow is about all I have to say. Shocking. Shocking, shocking, shocking. I'm wow, so glad I deal with stocks so I don't have to look at this kind of crap every day. Anyway, I want to go ahead and end it there. Bottom line is I'm happy now with the rally. I'm not a bull at all. Look at the dollar. If the dollar was moving up with the stock market indexes, gold and silver and platinum were moving lower, I would be excited. However, gold is moving up, platinum is moving up, oil is moving up, and silver is moving up big after being down big today with the market moving up. I guess this is a stagflation play maybe? An inflation play also maybe? I'm not sure. Whatever it is, it looks wrong. It looks odd. If the dollar was going up with our market, I would be super stoked. If gold and silver and platinum was moving lower with our market moving up, I'd be stoked. But the fact that gold and platinum and silver reversed after the Fed announcement and the dollar collapsed shows you that printing money is going to destroy this nation unless we call it in. I am pissed. I'm going to go ahead and end it there. Pray, 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 if you're a praying man, for this country, because these policy moves of the most evil institution ever created, the Federal Reserve, is going to wreck this economy. Buy gold for your future, for insurance, and if you want to make money right now, you're at the right place, bigwaytrading.com. The few others you can trust out there include Gary B. Smith, James DePora, William O'Neill in Investors Business Daily, Dan Zanger, I guess. I haven't seen his website in a while. There's not many out there, folks. Michael Oshbaugh at MarketWatch.com. He's another one you can trust. Excellent charting analysis. All of us, every single one of us, see the charts the exact same way. Read the market the exact same way. What way is that? The correct way. The way that's unbiased. You're a bull when the trend's up. You're a bear when the trend's down. You can have all the opinions you want, but it doesn't matter unless the price and volume and BOP confirms it. And that's what I do, baby. They don't use BOP. I use BOP. That's the biggest difference between them and me. I have an extra indicator. James uses price and volume. Gary uses price and volume. Dan uses price and volume. William O'Neill uses price and volume. I use price and volume with BOP because I've got the proof that says green to max green BOP all over the chart with the breakout in volume always works when the market is bullish. This is a very odd situation we're walking ourselves into. And I'll tell you what, guys, I am there for you and I will not abandon you. I know that we get these out late, but you know what? It's only 2 o'clock on Maui right now. And I know it's 8 o'clock where you guys are, but there's nothing I can do about that. I do plan on moving to Texas soon, and this will fix some of the problems that we have, because by now I'd probably be doing it 2 o'clock Texas time, which would be 3 o'clock Eastern time. No, it'd be 6 o'clock, because we'd have to wait till after the bell and the price charts get updated. So no matter what, you're going to get this at the time that I'd be doing it in Texas anyway. So let's just keep our heads about us. Let's follow the trend. Let's keep our opinions, because we love this country. We want to take it back. Ron Paul, Glenn Beck, Peter Schiff is where it's at. Just don't take any Peter Schiff's investing advice. You're going to go broke. Sorry, Peter. But definitely take his economic advice. I'm running out of time. 11 minutes is the max I can do these things. Part 2 and Part 3 for the subscribers on longs and maybe shorts next. Aloha.